Hello traders, it's Samurai Trader here. Welcome to this recap video. Traders, I posted a short video today. Well, when I say short, 16 minutes or so on YouTube in reference to trading the DAX. And I'd just shown a number of live trades that I'd taken and just talking about margins. And I've had 4 or 5 emails from clients and also from people watching my YouTube channel just questioning about the overnight margins required when trading the NQ. Now these were particularly from some clients and people from Europe. Now during the day we have much lower margins when we go to trade futures. For an example, on the ES, I think my broker allows me to trade per contract the ES contract with a margin as little as $1,000 per contract. Yet the overnight market, the Globex market, once the main market closed down, the margin goes up to, I think it's about 4,500. The same is true whether you're trading the Euro Stoxx 50, the DAX, the Dow, the NQs, the ES, oil, gas. Doesn't matter what you're trading. If there's an overnight market, that is where it's not as liquid as during the main trading session, the margins go up considerably for trading those. Now if you haven't already done so, because in a moment we're going to be looking at a chart, and I just want to bring this up as a really important point. So down the bottom left hand side, of course, right hand side, please feel free to make that full screen. As I'm going to just be talking about stop placement, which then comes back to risk management. And talking about risk, of course, the CFTC requires that I put up a disclaimer. Please feel free, if you're new to my channel, to have a read of that. I love this statement, and I talk about habits. Habits make or break us. And Aristotle, the philosopher, once said, so it's said by the way, we are what we repeatedly do. We are what we repeatedly do. And the message I just want to get across in reference to some of the questions that I received is that we need to have a mentality in trading of getting rich slowly. What we have before us, traders, is the greatest opportunity in the world today, and what we need on our side is something called time. And unfortunately, many traders that I'm dealing with, they've lost their accounts a number of times, and you've probably heard me talk about the psychological damage because of that, the hesitation when they go to execute trades, etc. You may have seen me talk about in one of my videos where I talk about trading is only 5% the strategy itself or methodology or technique. 5% is money management, and a massive 90% is psychology, is our head stuff, is where we sit head-wise. But what I want to quickly do is just focus for a moment on the money management side, because this is so important. It's absolutely critical that we keep our risk to a maximum of 2% per contract. Now what that actually means then is this. Let's just say here in our particular business where my typical stop, as I'll show you in a moment, on the NQ is around 14 ticks, 12 to 14 ticks, with a minimum of around 8 or 9 ticks if I'm entering with a very tight stop on one of my particular setups. Let me just read this out. So assume a margin of 3,500 per contract, 70% stop, 2% is 14 ticks. Your stop should never exceed 2%, irrespective. I just think this is so important, traders, because you are going to have one day 5 or 6 or 7 losing trades in a row. All of a sudden you're down 14, 15, 20% of your account on 2%, let alone 5%, where you've blown half of your account. And the psychological side of it is just so important. It's absolutely critical. So the ideal situation is never to risk more than 1% per trade. Now I work on a risk of 0.5%. Now what this allows me to do is to take multiple positions or add to an existing trade or add to a trend, etc., still not exceeding that, because if I do get wiped out, or when I say wiped out or have a losing trade, I've still within a certain comfort level. Now let me just show you this. Now as we go to the chart here, let's consider then, sorry traders, I'm jumping around here because I just quickly wanted to put this together. Let's assume here 3,500 per contract. Well, the day trading margin is much lower than that. So some of you may be thinking, okay, but I could be trading 3 contracts for that. Yes, but you're breaking the golden rule, traders, of the 2% rule, the maximum of 2%. Remember, get rich slowly. Develop the discipline of keeping your risk within that 2%, and the lower the better. Now you may say, okay, Ray, what about then I've only got $1,000 and I want to start trading. Okay, well maybe then you need to kick off by starting the Forex market, where you can trade a mini account and still keep within that 2% rule if you've got to say a 20 pip on a mini account stop, or 25 pips. So money management is absolutely critical, that you really manage this. So let me just quickly go to the chart here. So if we take this is the NQ from one day last week. Okay, we can see here we've got a 200 bounce. We've got a beautiful cross through here. This is what we call, by the way, traders, this is what we call a T10. We can see our long-term stochastic is falling here. I had then let me just scroll back a little bit here for you. Had some beautiful divergence with the trend, so it's just a golden trade. Now where would my stop be? Well, my stop I want to have on the NQ 2 ticks above here. So let's just have a look. Now in this particular case, I would have been in before the paint bar, so I would have been in on the close of this candle, which is 87.75. Take a high of 91.50. Let's just say 91.75. That's, well, there alone is 8 ticks. Let's add on, we got in, it might have ticked down quickly, so we're going to have a stop of at least, if we include 2 ticks above that little swing high there, of at least 12-13 ticks. Working on that slide earlier I was referring to, traders, where we looked at this one here. Once again, we need then 3,500 in our account anyway. So my point here is, and if we go back on nearly all of these trades, here it might be a bit tighter, here it might be a bit tighter, and by the way, for those that are not familiar with our form of trading, we've got a T10 there, got a beautiful 89 bounce. We had a T89, by the way, traders, and a pivot bounce here. We had a T10, highly accurate trades, but still you're still going to have losing trades. Now as I'm recording this, by the way, we've had the Greek vote last night, and of course I voted no. There's some extreme volatility in the market, and looking at the volume for the Globex, the after hours market, it's been some incredible volume trade. So please be very, very careful. Now, and in times like this, our stops and our money management really comes into it. So let's have a look over here. Once again, our stop should be down here, a close there of 85, a low there of 81.75. So look, you're still going to have a good 12 tick stop there. So getting back to your money management rules, if you're trading futures with less than a margin of $3,000 per contract, I hope you've got a very high probability trading strategy or a really tight stop. Now even traders, those that are clients of mine, even if we look at and take in consideration like the T25 we've got here, or here I should say, you're still going to have a good 10 tick stop. So I won't keep going on about all of this, traders, but it doesn't matter what market you trade, please ensure that you start off conservatively. My job as your success coach is to keep you in the business, and if you don't have the $3,500 per contract, whether you're trading or I should say 4.5 or 4,000 if you're trading the Globex market, well, maybe use a simulator for a little longer as you save. but start off conservatively and get rich slowly. Thank you, traders. Oh, and as I close off, please, if you haven't already done so, please subscribe to my YouTube channel. And if you'd like to know more details about my fast track day trading program, please drop me an email.